Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 24th of March and again it's been a fantastic day for the markets and all the indices are in green. The stocks are flying. The market has recovered very smartly and it is unrelenting rise now. And I just hope and feel for the people who would have shorted calls thinking that that market has fallen down a lot and March will probably not see this kind of a rally coming in. So that is the problem in having naked shorts in the system, and I hope none of you are carrying that, and if anyone is carrying that, I hope they are properly hedged. Because this is what markets do. When the markets go down, they don't stop at any resistance levels, any round levels, etc., and they overshoot on the correction side. And when they go up, the reverse is true. They will exceed every possible level that there is a short in the system. Until all the shorts are taken to the cleaners, the market will not stop, and it is unrelenting. And that is the beauty of the markets, that it will be unrelenting on both sides. You will want that, okay, at least couple of days breather should be there, the market should go down. No, it will gap up, it will continue to go up, next day again it will gap up, continue to go up. So that is the nature of markets. And you have to be very careful, especially when you're dealing with derivatives. If you are just a pure play investor, then great, then awesome. Because if you would have invested while the market was going down, something that I have been advocating for a very long time now, then it's good. But if you are a derivatives trader and have unhedged positions, then it is a bit of a problem. But having said that, the good thing is that the markets are up, and not only the mainline indices, but the broader indices have actually made a much smarter comeback. So for example, index like a Nifty Alpha is up almost 17-18% from the bottom. 17-18%. It fell down 35-36%, but it's recovered half of that in less than like 10 days. So this is the power of the short covering, and lot of stocks had fallen 40-50% in this rally, and lot of stocks and indices had come to fair value, right? Though Nifty had only fallen 15%, but what this 5 month of fall had ensured was that a lot of sectors, lot of stocks which had froth in them, a lot of froth was taken out of the system. Not to say that some of the things are still not expensive. Like for example, small cap, mid cap indices are still expensive in my opinion compared to the long term averages. And one should not make the mistake of thinking that this particular leg of bear run is over, right? Of course, yeah, I'm not advocating that anyone should hold any sorts of shorts in this kind of a market, but what I'm saying is that you should be very careful when you are buying into this kind of a market as well. Okay, thinking that okay, now the markets are going to break 26,000 or the markets are going to go to 30,000 and so on and so forth. No, it's not going to happen like that. The market is going to take out all the shorts in the system, and then it might consolidate for next 6 months. We don't know, right? Small cap, mid cap might still continue to correct even when the markets are consolidating. So while the euphoria is on, one should be level headed in terms of how they are approaching the investments, and not panic when the markets are correcting, right? And if you're able to do that, then only you will be able to generate a long term wealth. Now let us come to how the markets behave today, and I shall take you through. This is the Nifty 1-day chart, and you can see this is Nifty is now approaching the resistance line that we had thought. I'm not sure that this resistance line is going to hold, but if we cross this, then this will be a very good indication that we are now no longer in that lower low, lower high regime, and this we will break this particular high that we had made. So this will be the first time that Nifty is going to make a higher high, right? And then let's see where the once, let's say if the market comes down over here, something like this, where does it stabilize, right? So that will be the first indication that we are out of the lower low, lower high range into a higher high, higher low range, right? So, and the next target is 24,200. I'm thinking that it might go to 24,200. I don't know. Let's see, because if 24,200 is crossed, then that would mean that there is some real strength in the market. But frankly, honestly, I don't see a reversal happening so soon. Though I'll show you something interesting. If you look at, this is the Fin Nifty chart. Now look at this. Fin Nifty is almost at its 52-week high. 52-week high. So while market is still down 10%, Fin Nifty is about to break its 52-week high, all-time high, that is. Right? Look at this kind of smart recovery that has happened in Fin Nifty. Unprecedented, absolutely unprecedented. Gap, 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 gap. Just gap and up. So there is no way to catch it. And similar thing happens when it's falling down. You can see it falls down with gap, and then again it falls down very brutally. So this is the nature of the markets. Now even you look at Bank Nifty, the way Bank Nifty has recovered, it is not very far from its 52-week highs that it made, right? Not as good as Fin Nifty. So Fin Nifty probably will be 1 or 2% away from its all-time high. But Bank Nifty is slightly more than that. But look at the smart recovery that has happened. So my hypothesis was that something that doesn't fall that much in a bear market, and this time Fin Nifty and Bank Nifty fell the least, probably could be the leaders of the next bull run as well. Having said that, it's not a guarantee. Like for example, in 2020 COVID, FMCG stocks did not fall at all, but they never really rallied after that as well. So it's not a rule, but typically what is seen is that stocks which fall lesser during bear markets typically might tend to outperform in the next bull run, and especially financials, because of their valuation, etc., look very promising, and we have already seen how Fin Nifty is leading the charts in terms of the recovery. So that is something to keep an eye out for. A disclosure: I have positions in Fin Nifty in terms of investments, which I have been doing for a very long time, just because I prefer it as an index. It has got a lot of good financial names in it, and another problem in financials is that you just don't know where the bad news is coming from. We saw what happened in a couple of banking stocks which tanked 25% on one day, and we have seen what has happened some 3-4 years back when a couple of banks failed and they collapsed, and there was huge sort of IL&FS crisis, and Yes Bank and RBL Bank, all those crises we have gone through. So you just don't know where the next problem is going to come from in the banking sector, and hence if I have to take banking as investment, though I have some high quality names, but another very good way is to take the indexes, and also another very good way is to take the mutual funds. So if you want to even be exposed to a particular sector, there are a lot of mutual funds in that particular sector that you can look at. That gives you comfort in terms of the overall safety of, rather than getting into individual stocks. So yeah, so having said that, I mean, if anyone is interested in the mutual fund portfolio, there is a form that they can fill below, and they can contact me, and I can help people to make their mutual fund portfolios. I receive a lot of calls every day, and it's good to talk to people. And everyone is very, very different in terms of their requirements, in terms of their SIP amounts, and so on, in terms of the age profiles. So I get to talk to people who are senior citizens and students as well. So it's quite interesting to have that conversation. But if in case anyone is interested to build a good mutual fund portfolio, they can contact me through the Google Forms. Now coming to how the indices are performed today. Now let us look at, yes, one very interesting thing that happened today was that the VIX just shot up 9% up, and because of that all the option sellers got rogered today, including myself. So in the morning itself, all the calls went off of everything. Yeah, all the indices, the calls went off. Bank Nifty, Sensex, Nifty, everything. And the puts also went off, which is even funny. So that is what rising VIX does. So even the put stop losses got hit, except for a couple of indices. But having said that, if you have got a very good hedged options positions, then you will be fine. But having said that, this 9%, 10% kind of rise of VIX is quite challenging, frankly. Whenever it happens, it tests your system to the limit. So today this is what happened, and I'm sure all the option sellers will be feeling the heat. As it is, there is no zero DTE, so you can't even take counter positions. So yeah, that's where it is. In terms of the other indices, that have done well today. Public sector, enterprise, banks are up. Banks, as I've said, banking index is on a tear right now. Financial services 2% up. IT 1.4. IT is making some small comeback, I think. Infrastructure 1.4, energy 1.4, Nifty is 1.3, mid caps 1.1, small caps 1%. So they have been unrelenting in their rise up, and then the other indices are there which have done a little bit. Now, one interesting thing I like to show you over here is this chart. This is the USD INR chart. Look at where the currency is headed. Now, currency is at 85.56. It had gone to almost 88. Now look at the fall. Now this is what happens. Some days back, everyone was advocating to invest in the US markets, right? Because the US markets are making new highs. But what has happened is that the trades have reversed completely. Now Indian markets have started to do well. US markets have crashed, and USD INR has again crashed. So anyone who invested in the Indian markets like 15 days back would have a 10-15% outperformance over the US markets. This is what happens. Within a week, 10 days, the complete picture changes. And that is where it is very, very important to have a proper asset allocation mix working for you. Just don't go by narratives. Just don't go by momentum. Yes, if you're playing a momentum strategy, it's a very different kind of a strategy to play. But otherwise, don't have that fear of missing out that, this thing has gone up. Oh, I missed out and let me enter it now. Because the asset class that is not done well, there's a high chance that it will start doing well when you enter into the asset class which is doing well. So maintain a balance, right? Maintain ratios that I'm going to have 15% allocation to international. If that allocation goes down, ramp it up, right? So then you are going to see the benefits of doing that. And what also it ensures is that wherever your asset allocation is gone lesser because the market would have fallen or whatever reason, therein you buy slightly more to get that asset allocation back. So this is somewhat similar to the strategy that I follow for my clients while they're investing in mutual funds with me. Now let us look at where the options data is. This is the options data. We are at 1.15 in terms of PCR and Nifty, so there is no problem in that. It's bullish, not very, but it's still bullish. And this is the PCR of Bank Nifty 1.29. Now why I am looking at Bank Nifty is because this is the expiry week for that as well. Though look at the volumes, at one point and there were 15 crore contracts in it. Now it's just reduced to 2.9 and 3.8. But having said that, this month Bank Nifty has given spectacular returns in terms of the options. So this is something that I would like to highlight. It's been the best performing index for me. Though my allocation is lesser, but I will look at increasing my allocation in Bank Nifty going ahead. Sensex has not been all that great, so we'll see how the impact of this April 4th expiry change happens on BSE. My sense is it's going to disrupt a lot of things again, and Sensex is not been very reliable, I must say, in terms of the options, because the kind of spikes that are witnessed in the premiums, etc., it takes away the stop losses very easily. Let's see how it goes. Right now the positions are there, but I think Bank Nifty is something which is very interesting to look at now. So I will be looking at that more seriously going ahead into next year. Now what else in terms of the international cues? Let us look at the international cues. International cues are all fine, but I'll just quickly take you through the international cues as well. So you can see S&P VIX is down. 10-year is well behaved at 4.2. NASDAQ is up on Friday. So is NASDAQ futures. Bitcoin is up 87,000, no problem. Dollar index is 103.98. This is something which is very interesting. And you're seeing this, how this is impacting our USD INR also. So, probably the new administration in US also wants the dollar to weaken a bit. And if that be the case, I have maintained before that flows into emerging markets are going to increase, which is going to be very good for us. So if the quarterly results of our company start to improve, then we can see another bull rally coming soon. Brent oil 71, well behaved. USD INR we already talked about. Gold and silver. Silver has come down from 34 a bit, and gold is, as I said, 3,000 is the new floor, it seems. So it is maintaining that. FII data has been all right. They have been well behaved. The 7,000 crores that they bought on 21st March was on account of rebalancing of FTSE index, if I'm not wrong. So the net is about minus 15,000. DIs have bought about 30,000, and that's why you're seeing a lot of smart recovery also. So that's it from me in terms of the market. Market looks absolutely fine. And going ahead, the PCR is all good. Tomorrow we have a Sensex expiry. It looks all right as of now, unless there is some problem in the global markets. But this rally is getting stretched now. Having said that, it's going to squeeze the last bear out and then only reverse or halt. So I just hope that anyone who has got naked positions over here in terms of their options is able to manage it and has taken some counter defensive positions in terms of either selling higher puts or whatever it is. But try and not get into these kind of situations. Try and not selling overnight positions which are unhedged, right? Because it leads to a lot of anxiety, and when the markets run up like this, it's very painful to manage, right? Especially for people who are unhedged or new or who don't have experience. We all have made these mistakes. I have made these lot of these mistakes in my when I was a newbie trader. So all of us make this mistake. But from the lessons only, I'm saying that it really doesn't work out if you have unhedged positions, overnight unhedged positions, because anything can happen, right? So cut your losses. If you are in a soup, please cut your losses. Please take defensive positions, and please hedge yourself. Take as many instruments as you can to diversify, provided you understand those instruments and how they behave. And definitely unhedged overnight positions are a big no-no, right? So that's it from me now. If you like my content, please do subscribe to the channel. Please like, please comment, and I have a WhatsApp group as well. I will, which is there for friends and family. I was thinking that I will open it up for some people at least, because I see a lot of people who are commenting on my videos and they are regular listeners. So maybe they will benefit. So I will think about it, and I will let you know probably in a day or so. If so, you might just see a WhatsApp link in the description as well, coming soon. So if anyone would want to join in, I'm thinking about that. So that's it from me now. Hope you had a good day, and hope your portfolios are smiling and shining. And I shall see you soon with another update. Take care. Bye bye.